How's it going, everyone? It's Sam. Tom Lee just talked about some of the best stocks to buy, and one of them is actually one of the pure play crypto plays. So I want to go through it, talk about the cryptos and stocks that he's pointing out. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this one. Also, you can see Bitcoin falling a little bit today. Maybe some selling from the ETFs. Maybe it's just a bit of selling ahead of the election or some profit taking. But as you can see, we have just moved up very quickly. So I'm not surprised to see a bit of a retrace. Hopefully we bounce off this and continue moving up. I would not be surprised if something like that were to happen. If you want to trade crypto though, there's a link to Margex underneath the video. You can get started in just a few minutes. You don't need a VPN and you don't need to KYC, meaning you don't have to give up your personal information to get an account here like you do at a bank or at a brokerage house. So check this out underneath the video and let's start. So to be clear, this is from Tom Lee as of just 2 days ago. He gave us top stock ideas in Super SMID Granny Market Update. He talks about 10 different stocks that he thinks are going to be really good and 10 that he'd stay away from. We'll get into that. But I do want to play this. This is the most recent video from him where he goes on CNBC. Let me just play this for you. Of course, his ideas might have changed from this because this is from just about a week ago, but this gives us an idea of where he's at in this market cycle.
Let's talk more about where this rally goes from here this morning with Fundstrat Global Advisors Head of Research and CNBC contributor Tom Lee, who recently raised his target to S&P 6K.
Sorry.
Tom, good to have you. I loved your note the other day looking at what S&P revenue has done in the face of declining inflation, and your general point is that real revenue has accelerated, and that kind of explains why equities have been so resilient.
That's right, Carl. As you know, many investors and pundits thought as inflation fell, and it's been cut in half in the last 2 years, that would cause revenue growth not only to hit a wall, but that earnings would stall. But instead, S&P revenue growth is going to be over 5% this quarter. And on a real basis, that's over plus 2%. And that's the strongest. It's really one of the strongest numbers in more than 2 years. And so it is a really high quality earnings season so far. And, close to 80%, or actually more than 80% are beating earnings so far. So it's a good beat season, but it's early.
Right. And how much of it is due to financials? Is any kind of tailwind, although we heard various comments about this, if a Fed tailwind does exist, is it likely to affect other areas of the economy as much as the banks?
Well, in your opening comments, you talked about industrials, and that's something to watch because last week financials reported, and it was, pretty much universally better than expected, and financials are doing really well year to date. But the other group that's very sensitive to the Fed cutting would be industrials, and there's a lot of industrial reports this week. It's about a quarter of the S&P, but I'd say it's so far so good. And again, industrials are doing well in the face of an ISM that's kind of been at rock bottom for 2 years now.
Tom, how much would you ascribe the recent momentum to aspects of the election as that draws nearer, just over 2 weeks away?
I think that's been a dynamic. I mean, I've been fooled by seasonality because I figured from September to Election Day, markets would be very tentative because this is an extremely close race. I mean, this is a coin toss, according to Nate Silver. But something that Stan Druckenmiller said last week might explain a lot, that markets are betting that Republicans could take the Senate, and that actually could ignite animal spirits. So there may be underlying momentum that the Republicans take parts of Congress, and that's why markets are bullish.
Are you at all worried? There were some comments out of German PPI was down 1.4 year on year, Tom, but there was some ancillary commentary about worries about a reflationary period, largely due to geopolitical events. We mentioned oil coming back a bit today. How worried are you about that?
Well, I think that headline CPI could definitely get affected because oil moves dynamically, and it has an almost immediate effect on headline CPI. And we know transport costs have also spiked recently. Part of it's seasonal, but that affects headline. I think the market's going to be somewhat skeptical that could trigger a sustained reigniting of inflation, but I think the economic data is going to be a little confusing the next couple of months because, the Boeing strike itself is going to affect the jobs report. But I think ultimately the Fed is still on a path towards getting back to neutral. I think that that should be the focus, and that means, stocks which have been strong are really still a buy the dip market.
Now, he says buy the dip market. Today, the stock market's down. The S&P 500 is down about 1%. He's calling for it to hit about 6,000 by the end of the year, which isn't a huge increase from now, but it is a nice little bump, maybe 4% or something like that. Now, I will point out the fact that some stocks are down today, even after really good earnings. For example, Microsoft beat on revenue, beat on cloud revenue, beat on earnings per share. And let's take a look at the stock today. It's down 5%. So it beat on the three largest, most important metrics, and it's still down today. So yeah, Bitcoin being down a bit at 71,000, not surprising when the whole market is falling down. Now, I want to point out some of the stocks that he is bullish on. Now, Fundstrat and Tom Lee, they've outperformed the market, gotten a lot of recognition this year. And I will say, it's important not to take these people and put them on a pedestal and think that whatever they point out is going to be right. I think a lot of people did that with Cathie Wood, myself included a bit, back in 2020, 2021. So you have to be careful of that. But let's take a look at some of his top ideas. So top 5 stock ideas for October 2024. Then there's a tactical buy. So let's look at these first. NVIDIA, Meta, Uber, Amazon, and Tesla. Okay, some of the largest tech companies in the world. I'm pretty bullish on big tech. I haven't bought NVIDIA just because I think there's going to be a lot of seasonality. It's one of those things where I don't know when it will stop, but when it does fall down, I think it will fall down a little bit harder than a lot of these other companies. They have really high expectations every single quarter. Meta had their earnings yesterday. Uber has looked really good recently. Just look at this. Like you can see here, EBITDA is going up, revenue is going up, free cash flow flipped to positive a couple years ago. There is some worry about like the Tesla robotaxi and how that will affect Uber's business, but a lot of people also don't necessarily think that that's coming anytime soon. But Tesla on the list, Amazon on the list. Amazon's going to announce earnings today. These two companies are large portions of my portfolio. I'd also throw on Google in there. But let's go to the tactical buys. This is the Super SMID. I'm not sure exactly what SMID stands for, but they created the SMID Granny Shop portfolio strategy as many of our clients asked for our top SMID picks. So let's look up SMID first in case they actually explain it. Super mid something, right? Like not the largest stocks, because these are all obviously very large companies. Small to mid, we'll call it. AppLovin, Palantir, MicroStrategy, TG Therapeutics, Mankind Corp. Now, a couple of these I've never heard of, but obviously Palantir is a big tech, a big retail favorite. It's looked really good recently, and MicroStrategy. This is coming out before MicroStrategy announced yesterday that they're going to buy $42 billion of Bitcoin, or they're going to try to buy $42 billion worth of Bitcoin over the next 3 years. I think, though, when you look at MicroStrategy, it will probably do really well. MSTR. The reason for this is Bitcoin's most likely going up, right? It's most likely going up over the next year. We have Tom Lee saying that Bitcoin could hit well into the 6-figure range. So this is a pure play. It's much larger than the Bitcoin miners. So maybe that comes with some security for large investors, where they feel a little bit better. It's obviously a different business model too than the miners, but this has been on an absolute tear. Recently, I haven't been as interested in buying MSTR just because it has got traded at quite the premium, but I do think this will do well during the bull run, which is why I still hold some MSTR. I did diversify out of it recently. Half of my position I put over into IBIT and FBTC and some of the other Bitcoin ETFs instead of just keeping it all here because of that premium. I do think, though, that this is a great play to get into when sentiment is down, because most likely that premium will shrink and then it's kind of a game within the game. It's almost like a mini option, right? Of course, you have to do your own research, but I thought these were, honestly pretty good picks. Again, I haven't looked at TG Therapeutics, Mankind, AppLovin. Maybe you want to, because the rest of these picks seem pretty solid. But Palantir has done extremely well. MicroStrategy has done well. Meta has been a monster. Uber's done really well. Amazon, Tesla, Nvidia, they've all done well. Some of these I wouldn't touch because I think they're just trading at too high a multiple. If they come down, then I might buy them, because of course there are a lot of stocks that are just, they're beautiful companies. They're growing quickly. They're very consistent. They have a wide moat, but sometimes they just sell at too much of a premium for the risk that I think they carry. So let me know your thoughts on all this underneath the video. Thank you so much for watching. I appreciate it. Let me know which of these stocks you're looking at and thinking maybe that's a good one to hold. I will say too, some of the top stocks to avoid, he says, are Boeing, Ford, Nike, Pfizer, and Intel. So let me know your thoughts on that underneath the video as well. Thank you so much. I appreciate it. And I will see you all in the next one. And if you want to trade crypto, there's that link to Margex below.